Hey guys, welcome back to Crypto Broke, where we're not just broke, we are crypto broke. Here we're going to cover crypto strategies, education, and trading of cryptocurrencies. Now, I'm not a financial advisor, and if you're looking to invest, make sure you consult with a financial advisor before investing. Also, if you're interested in crypto trading, use the links down below to sign up for Coinbase, crypto.com, or if you're actively looking to trade, KuCoin is what I use in the US. A lot of people use Binance outside of the US, but unfortunately, Binance is not available for US citizens as of right now. Also, click the subscribe button, give it a big thumbs up, and let's get into today's episode. So today we're actually going to be looking at this is Coinology. So this is what we use to kind of forecast what's going on. As you can see, there is a ton of information in here, a ton of charts, a ton of graphs. Today, we're going to be focusing on RSI. So what is RSI for that, guys? One of the best resources is your Investopedia. So looking the relative strength index. So what is the relative strength index? It is a momentum indicator used in technical analysis that measures the magnitude, so the amount of the move of recent prices to evaluate overbought or oversold conditions in the market or an asset, which in this, we're applying it to cryptocurrency. The RSI is an oscillator 0 to 100, which again, we'll look at in a little bit. So essentially, if it is above a 70, it says that it could be overbought or overvalued. If it is below a 30, on the other hand, it could be oversold or undervalued. So again, we're going to look at this pretty in depth. So looking here, so the RSI right now, as it sits right here, is at 54. So it's kind of in the medium. As you can see, they use the 70-30. So that is kind of this purple hue right in the middle to see if it is overbought or oversold. Essentially looking up here, we're right about at 70 right here, but you can look at the correlations between where we are here, where we are in the MACD, that we'll look at in the next video, but then also looking where it's overbought. They're saying, hey, this cryptocurrency ADA or Cardano is overbought. Look what it did, way overbought. Well, to offset some of the RSI, you can see we had a dip right there, resulting in a dip here, bringing the RSI back down kind of into check, as you can see in the mountain. Once it hit about this, I think this is around a 52, 51, 52. That is about half of the way valued at 52. Then it bought up a little bit, and as you can see, we had a little rise right here, little kind of a peak off. So that's exactly what the RSI indicator does kind of look at and how they go through and measure the game. So right now, if you're looking to invest, you want to invest when the RSI is lower in value generally. And again, a lot of these are just general rule of thumb. So let's say if the RSI was down here in the 20 to 30 range, according to the RSI calculator or what we are looking at, they're saying that the coin is undervalued or it is oversold, meaning there was a big sell-off. That is an indicator. It might be a coin that you're going to be looking at investing in the future, or something that you're already looking at with the RSI itself. So looking a little bit further down here, so this is the actual formula. The RSI step 1 equals 100, 1 plus average gain or average loss, and that is what really drives it up or down. So essentially, if you're at 55.55 equals 100, there is the mathematical calculation, which I don't get really into that much because all of the charts and graphs, especially with Coinology, it is all spelled out for you. So looking here, using the formula, you can calculate this RSI, which is an indicator that you want to make sure you really know, because as you look further into it, what does the RSI tell you? This is the important thing. So not only looking at the price going up, the price going down, what does it tell you? The primary trend of a stock or asset is an important tool used to indicate readings are properly understood. For example, well-known market technician promoted the idea oversold of the RSI is likely higher than 30%, underbought is lower trend of 70%. And you can see in the following chart, during a downtrend, the RSI would peak near 50% rather than 70%. So this is one of the concepts that you really have to get into. So when it stays around that 50% mark, essentially the RSI can get its own kind of almost self-correct, that it can stay at a certain point to almost re-average or recalculate what's going on with it. Many investors will apply a horizontal trend line that is between 30 and 70 when a strong trend is in place to better identify the extremes. So that's what is really, really prominent in cryptocurrency is the extremes. We have cryptocurrencies that are up 100%, that are up over a couple months, a couple 1,000%, which is crazy. You don't usually see it with stocks and things of that nature, but ultimately with cryptocurrencies, they are very volatile. So looking in here, a related concept to using overbought or oversold levels appropriate to trends is the trade signals and techniques that conform to the trend. In other words, using bullish signals when the price is bullish trends and bearish signals when a stock is in bearish or a cryptocurrency is in a bearish trend may false alarm the RSI. So looking interpretation of the RSI and RSI ranges. Generally, when the RSI surpasses the 30, it is bullish. When it sides down below the 70, it is bearish. So again, looking back at our chart, you can see when it's going down, it is bullish. When it's going up, it's bearish. So depending how far it is though, is really what you want to look at. And again, set the RSI value of 70 or above indicates that it's overbought or overvalued. The reversal or a pullback could have a correction, so meaning that the price of the cryptocurrency will go down. An RSI reading of 30 or below indicates that it's oversold or undervalued, which means the price theoretically could go up. During the trends, it may fall into a band or range, which is our 30-70. During an uptrend, the RSI tends to stay above 30, and it should frequently hit 70. During a downtrend, it is rare to see that RSI exceeds 70 and the indicator frequently hits 30. So again, guys, really knowing what you're looking at here is the point that I want to make, because looking here, as you can see, we had a little down spike here, which was right here, the sell-off, bringing the RSI down and then back up. There are occasions which we could probably look back here and see where the RSI was really low. So look at it here. We had 1, 2, 3, 4 heavy volume sell-offs. So that really drove that RSI really, really low. And a couple times when we see it up here, boom, look at the spike. So even though the RSI went down right here, we had a little downtrend, then up, up. Even here, it was still almost kind of even though we seen a little downtick right here. And then boom, it broke out above the 70 mark. So right here, it's saying, hey, this is overvalued. There are too many buys, but boom, look at that. So we had two right in a row. That took it to 81, guys. So this was way overvalued at 81, which resulted in the correction of the RSI going back to 60. So look at that. If you bought down here when it was low, sold it up here when it was high, and then essentially bought it down here once it dropped back into this RSI range, looking into the future, you probably would have lost a little bit, but ultimately, once the RSI dropped, even if you waited, sold it here, bought it when the RSI was around 30%, then it's kind of getting even, a little bit of a dip there, and now right back up, really, really high RSIs right there, and then coming right back to where we are right now. So ultimately, guys, the example of RSI divergence. So bullish occurs when the RSI creates an oversold reading followed by a higher low that matches corresponding lows over the trend. So what this means is when the RSI creates an oversold reading, so essentially the price lowers, boom, the RSI rises, as you can see there. So even though the price was going down, or the price essentially was in a downslope, it still came up, making it a bullish divergence. So essentially, it shouldn't have went this way. As soon as the price was going down, or you've seen the falling price or the low and then the lower low, this should have corresponded. It didn't. It had a little bit of a rebound there and then right back down, as you can see here. So this was going down, this was going up. So a little bit of a divergence. Again, it doesn't work the exact same way every single time, because then you can see our up went there and the ups definitely continued up here, but it was opposite, meaning that it was bullish. Same thing if it's going up and the RSI is going down. So if they're doing opposite things, it is an indicator that it is very, very bullish. So examples of RSI swings. So again, this is really something to focus on. RSI falls into the oversold category. So when it's above that 70% mark, ISR or RSI crosses back below or back above the 30%. So that could be the rejection swing. So essentially, price went to a certain point. So even looking here, boom, right where we at, it dropped off. So right here, hit the 30% mark, which it looks like it gained quite a bit up here. And then it did another drop right there when the price finally got accepted. So once it broke through, here it was stuck at the 30, here it was stuck at the 30. Once it broke through this little resistance that we're looking right there is considered a breakout. So that's essentially what we're doing here, and what we've been focusing on is breakout buyers. So essentially, once we see this close, so once this closes above this little breakout line is when you do your purchases, guys. So essentially right now we have these yellow lines right here. We're waiting for this to close, which it has 1 hour and 49 minutes left. If this closes above here, we're going to go ahead and pick up some ADA, because as you can see, we'll back up our chart a little bit. So we have a down here, and then of course we have a point here, a point here. Down here we have a point. So essentially you can create angles, which again, we'll look at a little bit, or wedges, essentially that you're going to look to build in here. A little bit of a down pattern here, then it kind of came back from this point, bounced up, came back to this point, kind of down right there. And then ultimately, guys, we're seeing where this is headed. If it's going to continue with this pattern, essentially running out of this wedge formation. RSI forms another dip without crossing back into the oversold territory. So essentially on 3, it has a little bit of a dip here, but it didn't go back down to this 30. And then RSI then breaks into a most recent high, which 4 is the breakout point that you see right here, a massive, massive breakout. So like divergences, there is a bullish version of the swings rejected signals looking to mirror the bullish version. So the bearish one is just the opposite. So right here, if we look, we had some little bit of sell-off here. So the RSI indicates it's overbought. So right here's our 70 line. So it is definitely overbought, meaning it's going to come down a little bit. Boom, it drops past this 70% level. Then it goes, it looks like to about low or high 50s, maybe 56 to 58. With number 2, it goes back across the 70 level, and then RSI forms another high without crossing into that territory. So it went up quite a bit, and you can kind of see where it went up here, and then it takes a dip, and then it takes a big dip. So essentially, guys, if it is down here within, it looks like about 32, maybe 33 RSI. So essentially, when it is a very, very low RSI, a lot of people like to buy the coins, hold on to the coins till this RSI gets up around the 70% mark and sell it at that point. So essentially, wherever it goes up between these 2 points is the difference that you kind of pick up. The moving average convergence divergence, the MACD, is another trend following momentum indicators that shows relationship between 2 moving averages of a security's price. The MACD is calculated by subtracting 26 exponential moving average from the 12-period EMA. So those are the 2 that we use, guys. Right down here, you see the MACD. Right here, you see the RSI calculator. So RSI is going up here. So we have a little bit of an increase here. MACD, again, this is something we're going to get into a little bit later. But ultimately, there is a difference between them, and there is kind of a correlation between the two. 9-day EMA of the MACD is called a signal line. It is then plotted on the top MACD line, which can function as a trigger for buys or sells. So looking here, the blue is the buy, the yellow is the sell. So ultimately, these lines cross quite a bit, which will make it a little bit bigger. So where you see them cross, similar to what we have for the RSI, right here, the blue line's up, blue line's up. Oh, we hit pretty high right there on the RSI. RSI is high, RSI is high. Boom, we see the sell right here. Now it drops. That's exactly where it drops. We see a volume of sell, volume of sell. RSI is really, really hot. I mean, right here, we're at 71%. So it is very, very high, meaning it has to cool off, guys. That RSI has to cool off, come back down. Sometimes it can break the other way and actually go up, but the chances are with RSI being really high, it will go to the downside, which right here it says, okay, well, this is the sell point. And then it kind of builds up a little bit right here because the lines are kind of forced almost against each other. It is the way that I really see it. Limitations of the RSI. So the RSI compares bullish and bearish price momentum and displays the result in an oscillator that can be placed beneath the price chart. Most technical indicators are most reliable when they're conformed to a long-terming trend, which is exactly what they do. True reverse signals are rare. Remember that, guys. True reverse signals, meaning if it's going down, one's going up, for example, would be a bullish crossover followed by a sudden decline in the stock. So there are false negatives, which we can look at in a little bit. Since the indicator displays momentum, it can say overbought or oversold for a long time when an asset has significant movement in either direction. Therefore, the RSI is most useful as an oscillating market where the asset price is alternating. So essentially, guys, if this went up and the RSI was still relatively low, might be a good indicator that the cryptocurrency itself is going to stay remaining a little bit high or possibly does have room to go higher. Majority of the time when you hit this RSI and the RSI starts getting very, very high, chances are, just like we see here, the price is going to go down when the RSI gets higher and higher. So when you start hitting the 70 plus point, it's either going to be a new higher high, just like we see here. Even from these 2 points, it looks like it came down a little bit because it was a little overheated, but it did hit a new high. And then once it did hit this, what was it, 81, we had a really, really big decline all the way back to 60 on the RSI calculator. So guys, that will sum it up for the RSI. Again, we're going to be going through a ton of charts and graphs, a ton of the education for cryptos so you can trade them more efficiently. So guys, let me know in the comments below what you guys think. And as always, thank you guys for watching.